Well, hello, Spokane. I hope everyone had an amazing, relaxing, and enjoyable 4th of July weekend, and that now you feel refreshed and replenished to get after it this week. Now, today is that time of the month again in which we'll be doing our monthly housing market update for Spokane. And we'll be looking at the market data from June. And in doing so, I'll be answering the question of are home prices declining in a meaningful way? Is the inventory level increasing again in a significant manner? Are properties taking longer to sell? And then also towards the end, I'll share some of the forecasts from some big names in the industry, such as Zillow, the Mortgage Bankers Association, and some others. So again, so we have a broader perspective as to what to expect in our housing market. So with that said, let me jump right into it and share my screen. So let's again, let's start by going over the median sales price for June. So as of the end of June, the sales price closed at $457,000, which is pretty much flat from the prior month in May, where the median sales price was $460,000. Now, year over year, this is an increase of 17%. As June 2021, the median sales price was $390,000. Now, this slight decline could be mistakenly looked at or read as a sign that that prices are finally coming down. And the reason why I say mistakenly is because the exact same thing happened back in 2021, and then the following month, July, the median sales price rebounded, and I can show you that right here. So back in right here, from May 2021, the median sales price changed from $390,900 to $390,300. So there was also a small decline, but right after it in July, it bounced back to $406,000. So my point is that it's too early to tell based on this small negative change whether or not prices are now going to start trending downward for the remaining of the year. So to know that for certain, all we can do is wait and see what the July numbers show when they become available. So for right now, we're still in an incredibly strong seller's market. Now, with that said, I am not disputing that the market is slowing down. And I'm going to show you a concrete data that illustrates that being the case. Okay, so now let's go to just really quickly days on market. And not much changed when it comes to days on market. In May, on average, they sold within 5 days. In June, on average, these properties sold within 6 days. So most properties on average actually are selling still within a week. The actual meaningful change that I wanted to share with you that illustrates that the market is indeed decelerating are two metrics. And let me start here on active inventory. So the number of houses for sale at the end of June went up 42% from May, same year, 2022. So in May, we had 700 houses for sale at the end of the month. In June, we had essentially 1,000 houses. That's a 300 increase in homes available month over month, which is that's a big change. That tells you that the market is slowing down because as more houses become available, then there are less buyers per per property, which means that there is less pressure on prices to go up. And by the way, this level of essentially 1,000 houses for sale, we haven't seen since 2019. So far, that is the highest inventory level we've had in the last 3 years. And chances are it's going to be even higher by the end of July. So that's one metric that tells you that the market is shifting. The other one is this one right here. Percent closed above asking price. So in June 2021, the percentage of homes that were selling above asking price was 65%. In May this year, that number was pretty close, 61%. But look at the number in June, 53%. So we went from having 2 out of every 3 houses selling above asking price to only 1 of 2. So that is also another metric that shows, 1, that the increase in inventory, and 2, that the weakened the weakened buyer demand as a result of higher interest rates is finally taking a toll on transactions. So now, as a seller, this is why this number is relevant for you as a seller. Now you have to, 1, adapt your expectations of the market. You know, where a couple of months ago, it was a virtual certainty that you will get multiple offers on your home. Now, that is not the case so much. Now you have to be more intentional and strategic when it comes to choosing your pricing strategy, because there is a 50% chance that if you miss your pricing, your price point, you might end up chasing the market. By that, I mean lowering the price until you find the right buyer. So that's why that number is relevant. And then lastly, I wanted to share months supply of inventory just to see how that changed from May to June. So we went from having essentially a month supply in May to 1.3 month supply in June. So again, we're seeing a steady increase in the number of homes available. And the reason why I keep hammering this metric is because, once again, this is the number one factor that's going to help us discern or assess whether or not we're about to shift from a seller's market into a buyer's market. Once again, for prices to come down year over year, we have to have inventory levels around 5 to 6 months. So you can see, even though the month supply of inventory has been going up, still not meaningful enough to affect a price decrease on an annual basis. That said, notice that 1.3 month supply, again, is the highest we've had in the last 24 months. So now from here, let's just switch to the weekly trends. So the end of last week, Friday, July 2nd, the average sales price at the end of the week was 475, which is an increase of 6% from the prior week, and an increase of 15% from the same week, 2021. So again, even though we are seeing a slowdown in the market, a deceleration in the market, on an annual basis, we still have positive numbers, as the average sales price so far in 2022 is roughly 70 grand above what it was this time in 2021. Lastly, I wanted to share with you some of the forecast, again, from some of these major players in the real estate industry. So I'll be quoting forecast from Zillow. Hold on. Sorry about that. From Zillow, CoreLogic, the Mortgage Bankers Association, and Fannie Mae. All of these entities are expecting prices to increase into 2023 albeit at a slower rate than what we've seen in the last 24 months. So most of them are forecasting price growth in the low threes, with the exception of Zillow, which is forecasting a price increase just under 10%. So overall, here is what the numbers in June mean for you as a buyer and for you as a seller. For you as a buyer means two things. One is that now you're seeing more options to choose from as, again, the inventory level continues to increase. Also, you are noticing that many houses are making it past the first week on market, which means that you are avoiding getting into multiple offer situations, which means that you now have the opportunity to write an offer or purchase a property either at asking price or potentially below asking price. The downside, obviously, is the recent hike in interest rates, which is undermining your buying power and, of course, making it more costly for you to get financing. So that's the pro and con. For you as a seller, these recent changes mean primarily two things. One is that now you have more competition. Again, inventory went up by 300 houses from May to June. So if you're thinking about listing in July, you have to be mindful of that and be more strategic and intentional about the pricing strategy that you choose, because now you have a 50% chance of not getting multiple offers and end up chasing the market, meaning lowering the price until you find the right buyer for your home. So as for long-term, what we can expect, once again, was to have just over a month supply, which means that we remain in a strong seller's market. The median sales price is close to $70,000 above what it was in 2021. So for all the doom and gloom media headlines that keep bombarding us on a daily basis, you know, the data doesn't show that happening anytime soon here in town. Could that change? Absolutely. We'll just continue to monitor these key metrics, you know, inventory levels, days on market, median sales price. And, you know, as this data continues to come in and we start noticing a trend, then that will give us a better idea as to whether or not we can expect prices to come down in the next 12 months. Now, once again, just as I said on my last video, it is extremely rare to see negative price growth year over year. And here in town, that's only happened twice. Could it happen a third time? Yeah, of course it could. But that will take, you know, a special abnormal event for it to be the case. So if you're a buyer waiting for the market to crash, I would say don't do that, because it is highly unlikely that prices will come down, at least in the next 6 to 12 months. And for you as a seller, you know, you still remain in control for the most part when it comes to in the type of market we're in already. I hope you find the video helpful. As always, for any questions or comments, please don't hesitate to reach out. Thank you for watching. Make it a great day.